Does wealth still have a home, or is it truly borderless?
Wealth remains borderless, but borders become stronger.
Today, wealth is usually spread over multiple jurisdictions, multiple structures.
So what do these governments do? They are forced to increase taxation.
The generation shift will accelerate this trend.
One region is up, the other one is down.
It's only going to get more complex in managing global wealth.
Hello and welcome to Inside Private Wealth, our podcast brought to you by Wealth. And today we will be looking at the question, does wealth still have a home, or is it truly borderless? Deepak Mehra, the chief economist of CBD here in Dubai, the CEO of WELF, Christoph Tunkl. Welcome, gentlemen.
Thank you for having us.
Thank you. If I could start with you, Deepak, does wealth have a home, or is it completely borderless? Deepak.
Yeah, thank you, Greg. It's a pleasure to be here with you and Chris. The short answer to your question is wealth is homeless these days. So are people. Wealth belongs to businessmen. We know that over the last few decades, businesses have gone global. The world has become flat. We've got businessmen who are based in Asia, who have businesses in US or Europe, and their family office would be based in Dubai here with us. So the wealth is absolutely international today and getting more and more international. And there are many factors behind it, but short answer to your question is it's nomadic these days.
Great answer. Chris, are you going to disagree, or?
I 100% agree with Deepak, because what we see obviously is that today clients, or generally wealth, is usually spread over multiple jurisdictions, multiple structures, multiple investments anyway. And as you mentioned, the world has been flat or has even become smaller. Yes. Traveling is easy, everything is much easier. So yes, it has indeed become totally borderless or homeless.
And obviously that hasn't come from nowhere. Clearly there must be something that is driving wealth across borders. So what are the engines? What are the drivers here, Deepak?
Well, Greg, there have been many drivers, but we can take it, let's say, region-wise. And the example I gave you about Asia, most of the wealth in Asia has been created in the previous generation, one generation, possibly, because of the dynamic business environment which came with this flat world. And that wealth, of course, has been generated through international businesses. So for Asian families, wealth has always been earned globally. It was never earned or inherited within their countries. But which is very different in Europe, for example, where businesses have been more domestically oriented. Wealth has, in many cases, been inherited, and there is family wealth running across generations. And there, the dynamics are very different. There are many macro factors which are playing, which are now moving that European wealth global, or seeking global safe havens.
But if we look at the global picture and the global macroeconomics, what is it? What are the global trends that are obviously, aside from Asia, driving this?
Yeah, I think the big ones that we have to look for, where the big wealth lies and which is now becoming mobile, is in Europe. And the macroeconomic factors which are today driving this shift in the way wealthy people look at their money and decide how to manage it, are coming back from very, very basic macroeconomic factors. One of the biggest ones is that developed countries are aging. Their population is aging. The younger population that can replace them is not growing at the same pace. So you have unfunded tax liabilities that the governments are carrying, huge unfunded tax liabilities. And then you have a welfare state sort of a setup in Europe where the government spending remains high, the deficits are growing, The debt levels are growing. So what do these governments do? They are forced to increase taxation. You look at across Europe today, the average taxation is anywhere between 45 and 55%. Now you extrapolate this to the next 10 years and 20 years. This is not going to be at 45 to 55. This is likely to continue to rise because the basic macro factors are not coming in. It's not as though we are getting more younger population working in Europe and so on. So that's one of the driving factors behind wealth seeking other offshore locations, where they can manage their tax more efficiently, especially when they're also earning globally and their businesses are spread. So why not? So I think that's the big driving factor in Europe today.
Wealth looks for wealth. In other words, if you have geopolitical shifts, meaning one region is up, the other one is down, what you're going to have is the wealth in one region is going to go to the wealth in the other region. Would you agree?
Absolutely. Wealth is very efficient. Yeah. Global markets are borderless, like you said. So automatically this happens. Yeah.
Okay. That's brilliant. Thank you for painting the macroeconomic picture. Now, to get to the sort of client-based view, Chris, what are sort of clients saying in terms of the desire to move their wealth? Is that something across borders?
There's two big factors. One is the generational shift. So what we see today is wealth that is now inherited or taken over in entrepreneurial systems or companies by generation that already is international. Because the generation often, especially in Europe, for example, when they created this wealth, the world was not that easy borderless, simply because there were challenges on moving assets, on moving yourself. Traveling was not that easy. So all this changed. So the generation shift will accelerate this trend. And we got more and more requests of the generation taking over today to diversify their assets in different jurisdictions than maybe we had 20 years ago. So that's obviously a big shift. Then, yeah, obviously also we have tax efficiency, tax optimization, topics that might not have been that much in the spotlight 20 years ago, that today have a real impact. We saw it in the Henry report mentioning that 142 millionaires are on the move globally, shifting wealth around. And for example, we see that last year there were 10,000 millionaires moving to the UAE. So we see that there's a shift internationally that people are, I wouldn't say chasing wealthy hubs, but obviously, as you mentioned totally correctly, wealth is moving with wealth. So there are these financial centers that are booming. And obviously, if you are part of this movement of wealth individuals, and that's why we get a lot of requests also, people want to participate. Maybe not 100%, but the question is often, okay, I have my wealth. I don't want to keep it in one specific jurisdiction. What is the smart move to diversify it over multiple jurisdictions across border to minimize my risk, to handle my risk management, so to speak, also on currencies and so on. So that's definitely the trend, yes.
And of course, I mean, this trend is very well publicized when it comes to sort of, European clients. The press has written extensively about that trend. But what the press has not really highlighted much is how UAE clients feel about multi-jurisdiction, about spreading their eggs across multiple market baskets. So what's your view? Because obviously, Deepak, not only are you the chief economist, but you do have a track record in wealth management before your current.
Correct. It's very interesting. Actually, there is no one solution for our clients in the UAE. They are quite diverse. UAE is a melting pot for so many nationalities. But if you look at broad trends, you have international investors who are more and more favoring setting up their family offices in the UAE. It just gives them a lot of benefits and advantages other than just taxation. It's just the way UAE is set up. And there are many factors. We'll come to UAE and I'll explain why we are so bullish about UAE. But then you have the domestic, local, the entrepreneurs who have created wealth over the last 1 or 2 generations. And they are definitely especially the younger generation, is looking at the whole world, whereas their fathers or grandfathers would have looked at the UAE to have their real estate business, buying properties here, building towers, acquiring land banks and so on. The younger generation likes to diversify. And so we are seeing a lot of global diversification. Of course, when we speak to families in UAE, the ultra high net worth families, they tend to be in their investments very focused towards the West, where you'll find that their equity portfolios are US centric and their real estate portfolios are Europe or UK centric. I don't see many looking at the East from here. That's what we've seen. And then, as I said earlier, family offices from Asian families is a very big, trend here. And again, by nature, they are very diversified. They are extremely disciplined and diversified in their approach. So from a wealth management perspective, as a bank or as a wealth manager, we get to see a lot of diversity, and we get to see clients with preferences which are very global.
So clearly, based on what you've just said, Deepak, a really high level of financial sophistication here in the UAE, which has been earned over the last 20 years, the regulatory framework. So if we just take a step back and we look at some of the more unhelpful Western media headlines that we've been seeing, what is the actual reality on the ground? Because I always find there is no substitute for speaking to the people who've got boots on the ground. Let's start with you, Chris.
Generally, you have to see, from my perspective, I'm here like for 20 years.
Yeah.
Typically have a lot more experience on the ground than I have in this region. But generally, what we see is that short, let's call it crises, whatever you want to call it in UAE, they have been handled all quite easily and nicely compared to other financial hubs. Because we have to realize that we are in a quite young financial market or financial center compared to the standard New York or UK or whatever markets. But the effectiveness that the regulatory frame has put in, the attractiveness that they were able to roll out to attract companies and everyone, is giving such a solid foundation that I would call it short-term geopolitical events will not have any effect on the region's growth. It's like everywhere. It's gonna be more or less, but it's not gonna affect the long-term view, I think, of the UAE.
Absolutely. Absolutely. I mean, look, Chris, you've been here 20 years. I've been here 29 years. And I've seen many cycles. And like you rightly said, crises do happen. We can't control that. But the policy responses that are put by the local governments here are just spectacular. And that is what makes all the difference. So we can't avoid crisis, but we can manage the way we respond from a policy point of view. And whether it was the great financial crisis, 2008 or 9, which you would have seen here, or the oil price crash in 14, 15, 16, or COVID, the policy response from the government has been so spectacular that every crisis then became an opportunity for a new set of investors to come in and benefit. And a new cycle of growth would come out of every crisis. So when we've seen 3 cycles before, or at least I've seen 3 cycles which we've gone through in such a brilliant fashion, managed so brilliantly, I have no doubt that after this little bit of setback that we've got because of the regional conflict, we'll come out much stronger, and whatever has built the UAE fundamentally doesn't change.
Obviously, we did touch on the fact that we are living in a complex world. What does a wealth manager in the year 2026 need to do the best possible job, Chris?
I think we're coming back to the story we started, because we're talking, our clients, we consider them as global citizens. So all you need to do is adapt to show the flexibility they need to adapt to their needs wherever they are. So I think that's for me a key. On the other hand, let's maybe go back to the personal relationship. We know that today banks have moved to quite large institutions and obviously are more rigid to handle. from our perspective, a wealth management entity that should always have this boutique approach, should put in focus the client as an individual and the individual needs again. So it's a mix of this global citizen approach where you have the flexibility to provide whatever he needs, wherever he needs, whenever he needs it. And obviously also the human touch, because we're looking for long-term relationships.
Deepak, you obviously come from a slightly different end of the financial services spectrum to Chris. I mean, Chris is the boutique end of the spectrum. You are the more mainstream institutional end of the spectrum. What do you think about the strategy, the approach?
Yes, absolutely. I think where Chris comes from a very boutique private banking approach, that is something that we are working on as well. We have private banking clients. But mainstream approach to wealth management over the last, let's say, decade or so has been towards digitization. And that was something that I worked last in my career, creating a digital investment platform. Now, what we've seen in the or let's say in the investment space is that we're seeing more and more customers getting into self-directed investments. And part of the reason is because the investments platforms have become democratized. So you don't necessarily need to be a private banking customer to be able to access investments. So now it's become more democratic. So we've seen a lot of mass affluent customers coming in and becoming active investors. The friction to investment has been removed because of digitization. But there are some problems there. One, we can see that more and more self-directed investors are going towards trading rather than investing. The disciplined approach to investments has been lost somewhere. And you see all these platforms giving you all sorts of advice. You can follow somebody's investment portfolio. You can, follow some other trends and so on. My worry on the digital platform, which I helped create, one of them, is that are we really leading to the disciplined approach of investing, or are we simply creating more and more traders? And that gives me a little bit of a worry. Ideally, investments has to be managed in a very disciplined manner. If I have money to manage, I would rather give it to Chris and have a disciplined approach rather than sit down myself and keep trading about anything that I read in social media. So I think those trends maybe will evolve over time. Or maybe it's that the mass market will move more towards that. Maybe more artificial intelligence will come into these platforms. But clearly, I see trends moving in both the directions, serious money moving in this direction, the play money moving towards the digital space, probably.
It's very interesting you mention AI, because obviously that's something you can't get around. I mean, it is there, it's here to stay, we can't avoid it. So I think, especially on, as you mentioned, on a wealth management perspective, obviously I wouldn't say we compete with it, but we have to deal with it, because this tool gives the client today an access to information very quick, unfiltered, and often provokes some misunderstandings or misalignments with a typical traditional wealth manager. So I think this is something we also always try. We love AI to use it for tools that are supporting the human relationship and not replacing it.
Yes.
And I think for you have this sharp analytic mind. So I would be curious to have your opinion on the AI play on a macroeconomic level, because I mean, it's a huge industry.
Yes. I think AI is here to stay and build on, and it is going to become second nature. We will never find out what is AI and what is not AI, because it'll be all permeating. As far as opportunities are concerned, I think AI will lead to higher productivity in every field. If you are managing wealth for your customers and you are the trusted advisor, you would still need to be supported by AI. AI is not going to replace you ever on your end of business, but it will make your wealth managers more productive. So if I have to give any advice to the wealth managers, I would say, look, you don't have a threat from AI, but you have a threat from AI-enabled wealth manager. And that would be something formidable. And I think AI is more from an opportunity perspective, as an investment theme. Of course, that's there. A wealth management industry will benefit tremendously from AI. That's how I look at it.
Interesting.
Great. Now a slight gear shift. If you did have a pile of money, and that amount is 50 million US dollars sitting pretty in your bank account, what would you, Deepak, what would you, Chris, do with the 15 million? I'd like you to think about maybe allocating it to multiple markets. What would you do? Maybe I'll start with you, Deepak.
Okay, the short answer to that is I'll call Chris. That's it. But Chris, please solve the problem. So that's what I'll do first.
That was a really smart way of trying to dodge the bullet. But the bullet is still coming towards you. Sorry.
Yeah. Okay, it's very simple. I think if that was the case, there are a few things that I'll look at it. One, you'll have to first decide where do you locate yourself? What's your domicile? And then what are the other asset classes that you need? So to begin with, for me, it's a no-brainer. The domicile remains UAE. And it'll have to be managed through a family office and setup, which is either in DIFC or ADGM or one of these, top-of-the-line global centers. That then gives you the flexibility and makes the whole world your oyster, so you can go invest anywhere. And then, of course, diversification is very important. But to begin with, I'll have a home in Dubai somewhere or in Abu Dhabi. That'll be part of the investment of that 50 million because I don't think you get a better quality of life than the UAE anywhere in the world. China, of course, China tech remains one of the underappreciated story, but not the big companies. You'll have to go hunt. So maybe, Chris, you'll have to find a fund manager who can identify the new upcoming companies in China, mainland, onshore, working in the tech sector, just as we find them in the US in the startup and the new ones coming. But yeah, globally diversified, based in the UAE, a nice home in Dubai or Abu Dhabi, family office in the IFC, and the rest in the hands of Chris. Yeah.
Chris, unfortunately, you are now the guy who is in charge of the rest. But actually, let's pretend you don't have the rest. You have all of the 50 million still in your bank.
And my 50 as well.
And his 50. Exactly. What would you do, Chris?
I think it's absolutely right. First of all, I would also think about geographical allocation. So where's my center of life? There I would dedicate the most of my assets. And then, I have European background, so probably I would even have some exposure to Europe. Beside the classical allocation in bonds, shares, market, financial instruments, I would probably also go a little bit into alternative investments, private markets. It's interesting you mentioned, for example, China with the more niche players, identify some other players. So I'm a big believer of the private markets because that's something that has been closed quite long for the private individuals, now is opening up. So I like this idea of going to China, chasing some startups or something, or even, also there are dedicated teams that can do that for you. But I think the private market play could be a nice one to add to the classical allocation. But fully agree, where my center of life would be, which hopefully will be the UAE as well, there should be my max exposure.
You guys are 100% aligned about the center of life being in the UAE. You've obviously had a tremendous run here of over 2 decades, and actually 4 decades if I put it all together. It's just some final reflections. What do you think is, the future of, let's start with you, with wealth management overall, if we look into the crystal ball? And what about borders? Is there going to be a day when borders will fall away completely for wealth, do you think, globally? Or are we being a bit too optimistic or too kind of, bullish on that?
Interesting. So 2 aspects to that. One is on wealth. I think the macroeconomic story over there is that the economies are getting more and more K-shaped, where the wealth is now getting concentrated at the top end. The wealthy are getting wealthier. people who have exposure to equities and real estate and the growth assets are getting richer, and the populations that do not have are not benefiting. So the economies are moving in K-shaped. People on the top, people on the bottom. So that's one thing which is likely to get accentuated with time. There'll be steeper case. That's one. Number two, as far as borders are concerned, wealth may be borderless, but protectionism is going to get more acute. When I say protectionism, every country is worried about their own interests. So borders will stay and get more stronger, I guess. Everyone wants to protect their interests. Everyone is getting more nationalistic. Every country wants to retain their part of wealth or whatever they can. So there'll be more challenges for a borderless wealth. Wealth remains borderless, but borders become stronger.
So it's good for you and your profession.
Indeed. Well, good. It's more work, but indeed, it's good. Yeah. No, I absolutely agree, because I think we have these two trends. We have the global citizen play, like wealth is being borderless, but then we have the economical or regulatory framework that is more and more restrictive, obviously, to maybe avoid this too fluid wealth movements. And for us, yes, I mean, it's right. This complexity that is added obviously forces us today to be, first of all, very sharp on the structuring of a client. It's not probably anymore enough to have simply an account in your name, but you need to restructure it in different corporate structures, in trusts, in whatsoever is adapted to your current situation. And then as a wealth manager, we have obviously the luxury position that we can work with different custodians worldwide. So for us, it's a notch easier to offer this borderless, simply because we can move the wealth of the clients to different custodians in different countries and different jurisdictions. But that's going to be, from my point of view, the challenge to, I wouldn't say fight, obviously, what is happening on the regulatory framework, but to adapt to it, to keep the wealth idea of a global citizen alive. Yeah.
Yeah. And so that brings me really to the conclusion of our podcast.
And as we've heard, obviously, there are many things that favor the wealth manager of the year 2026. There is the need to keep wealth flowing across the borders despite regulatory changes. And that's why we need chief economists, and that's why we need wealth managers. And I can't see AI ever disrupting that. So thank you to everybody for watching us. And thank you to our production team for making this podcast possible. Until the next time, stay safe, keep healthy. It's been a pleasure. Thank you, gentlemen.
Thank you very much.
Thank you.
Thank you, Greg.